Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief. And today I'm getting back to basics, talking about tax levies. I'm going to talk about what is a tax levy and how does it work. I'm going to talk about what is the difference between a tax levy and a tax lien. I'm going to talk about, is there a maximum amount that the IRS can levy from you? And finally, I'm going to talk about how to avoid a tax levy slash what to do if the IRS is actively levying you. So first of all, what is a tax levy and how does it work? A tax levy is simply a seizure of your property by a taxing authority to satisfy your tax debt. Okay, after providing you sufficient notice to resolve your balance with the IRS, right? And I've talked about some of these notices here before on the channel, right? Such as the LT11. Link to that video about that notice here at the top right of the screen. There's other levy notices too, the CP 504. I mean, there's a whole bunch of them, right? But after the IRS has given you sufficient notice to deal with your tax debt, right? And that's a legal requirement. IRS has to give you notice. Then the IRS will send levy notices. Now, this is how levies actually work practically. The IRS will send levy notices to the parties that it believes that hold your property or rights to property. Okay, and I'll show you an example here. Right, here's a copy, taxpayer's copy of the notice of levy that was sent to the taxpayer's bank. This taxpayer banked at TD Bank. Right, you can see that here. So the IRS sent this levy notice to TD Bank, right, and it put the taxpayer's name here and their address and their social security number here to let TD Bank know who they're talking about, right? And what the IRS is doing is telling TD Bank, look, this taxpayer, this customer of yours owes us $313,000, okay? And you got to give us the money in this guy or gal's account up to $313,000, right? And as I'll talk about a little later in this video, they can only take up to the amount that was in the account when the levy was provided to the bank. Okay, same kind of thing with employers too. For wage levies, IRS will send a levy notice to the employer saying, "Hey, your employee owes us this money, and you gotta pay us most of their paycheck essentially." Right, so that's how levies work practically. Okay, the IRS sends a levy notice to the entity, the party that is holding the funds, right, the bank or the employer, and saying, hey, pay us, not your customer or your employee. Okay, and the IRS can levy other things as well, right? Social Security, real estate. They can seize your real estate or other assets. They can levy assets in your brokerage accounts, accounts receivable, and more. Okay, but that's basically what a levy is. Levy is simply the IRS taking your stuff, and that's how levies work. What's the difference between a tax levy and a tax lien? Because people get these things confused. Okay, like I said, a tax levy is the actual seizing of your property by a taxing authority like the IRS or your state or some other taxing authority. A notice of tax lien is not the actual seizing of property. A notice of tax lien is a document that a taxing authority can file in county records and in some cases state records to let the world know that you, Mr. or Ms. Taxpayer, owe them money, back taxes, and that they have a right to all of your current and future assets and rights to property to satisfy this debt. Okay, and this document will typically list the amount owed by year. Okay, right, here's an example of what a notice of federal tax lien looks like. This one was against actor Nicolas Cage. Basically, this was IRS filed this with the Los Angeles County recorder, right? County records, public record. Basically saying, hey, this taxpayer owes us, $6.7 million, right? Letting the world know this. Okay, this is a tax lien. All right, so while tax levy is like the IRS or some taxing authority actually taking your stuff, the tax lien is a notice to the world that you owe them money. Okay. Now let's talk about other limits on tax levies, right? Can the IRS leave you completely just high and dry without the shirt on your back? The answer is no. There's various amounts in the tax code, and some of these amounts are updated for inflation every year, of amounts exempt from levy. they have to leave you, a certain basic amount of, furniture and fixture. Like, they're not going to take their shirt off your back, people. Okay, they're just not. But for the more common levies, right? Seizure, actually taking your physical property, is actually fairly rare. The IRS does do that, right? But it's just a lot of work to take your boat, right? You know what I'm saying? Or some other physical asset, than it is to simply send a notice to your employer, hey, pay us, not them, or you're going to be liable, right? Or send a notice to the bank, right? And they're like, okay, they can just send the money electronically. No IRS employees have to go out there and seize the boat or whatever, and then they have the cost of storing it and then selling it, right? The IRS would much rather just take money electronically from you than seizing your actual, physical assets. So for the most common levies, okay, the most common levies that the average American gets is the bank levy and the wage levy. Okay, the bank levy, like I said before, the IRS can't take more than what was in the account when the levy was served. Right? Even if you owe $1 million, if only $100 was in the account when the levy was served, that's all the IRS can get. For that particular levy, they could issue another bank levy, next month, right? But for that particular levy, that's all they could get. And of course, they can't take more than what you actually owe the IRS, right? That's probably obvious, but I thought I'd state it. Wage levy is a little bit different. With the wage levy, how it works is your employer has to leave you a certain amount of money, and the amount they leave you is based on your filing status, number of dependents, and how often you're paid. And then they're supposed to send the IRS whatever is in excess of that. Okay, so that's how those things work. So yes, there are limits on these levies, as I've described. In terms of kind of the automatic levies, if we're talking about something like Social Security, through automatic levies, the IRS can only take up to 15% of your Social Security benefit. They can take more through a manual levy. Okay, so if you had a really nasty revenue officer on your case, they could go crazy with manual levy actions. Okay, if you really tick them off. Anyway, folks, I hope this was a good explainer on tax levies to you. Some people get confused. What does that even mean? What is a levy? What the heck's a levy? Is it a lien? Is a lien same as a levy? No, it's not. It's a different thing, different power the IRS has in its toolbox. If you found this video informative, please go ahead and give me a like. And if you have any questions about IRS tax levies, please leave a comment in the description below. If you are facing an IRS tax levy, I didn't address this. I wanted to talk about it in this video. If you're facing an IRS levy, or you're currently under levy action by the IRS, what should you do? Okay. Well, first of all, you can obviously avoid a levy by paying your overdue taxes. Obviously this isn't possible for everybody, which is why taxing authorities like the IRS and states have various programs for taxpayers to deal with their tax debt and avoid levy action. Example, these programs are, I've talked about them ad nauseum on my channel: installment agreements, an agreement to pay your balance, or even just a portion of your balance, with the rest being written off to the IRS over time. There's currently non-collectible status, also known as hardship. This is a temporary status with the IRS in which the IRS will not attempt to collect money from you and will not expect you to make payments from them until your financial situation improves. If your financial situation never improves until your tax debt drops off, link to that video at the top of the screen where I talk about how tax debt drops off, it's gone. You don't have to worry about it. Third thing, offering compromise, which is an agreement with the IRS to sell your tax debt for less than you owe. Okay. And you can pursue these preemptively to prevent levy action. If you're in the middle of levy action, I would recommend that you avail yourself of one of these options. Okay. For example, with the bank levy, right? With the IRS bank levy, there's a 21-day freeze period that the IRS has for bank levies. Okay, where the bank freezes your money, but they don't send it to the IRS yet. This is a crucial period in which you absolutely must, assuming that the balance up for grabs is significant and material to you, you must work out some kind of resolution with the IRS, right? Such as those I just described, in order to stop the levy from happening. A common thing we will do, well, a common way to approach this is to show the IRS hardship, right? Levying this bank account, taking this money will cause the taxpayer hardship. You will have to prove that with financial documentation, right? If you're making a whole ton of money and there's only $100 up for levy, right? The IRS probably isn't going to buy that. Okay. But, for some folks, the money the IRS will take out of their account or is up for grabs, it's been frozen, is truly a significant amount of money, and they wouldn't be able to live if the IRS took it. Okay. Second thing that you could do, right? If you can't quite prove hardship, another thing you could do is just set up some kind of installment agreement for now, right? Just to get the IRS off your back, off the levy, release the levy, while you and your tax professional maybe work on a more favorable resolution later, right? So maybe getting the IA now to prevent the levy action, to stop the bleeding, while you can kind of analyze, hey, am I eligible for an offer in compromise? Hey, could I actually be eligible for a hardship-based payment plan to lower my monthly payment that will maybe even result in a partial payment installment agreement, which means that I'm not even going to have to pay back all this tax debt, right? Because some of it's going to drop off at the CSET date. So, things like that. So that's kind of the basic action plan if levy action is imminent or you're in the middle of levy action. And these are the basic tax relief options, right? These are the things, the services, the things that we secure for our clients here at Choice Tax Relief. I have a whole video, about the major IRS tax relief options here at the upper left-hand corner of the screen. I have a playlist of all my tax relief videos here at the bottom left-hand corner of the screen. If you owe at least $10,000, you want a free consultation, give us a call at Choice Tax Relief, 866-8000-TAX. That's 866-8000-829. Or go to choicetaxrelief.com, fill out the form on the website, and we will reach out to you. Thanks so much for watching, everybody. I'll see you in the next video. Bye-bye.